Hello, my name is Winifred Ogigo. I'm a licensed real estate agent here in Ontario. Welcome back. So today we're gonna be talking about, for most people is the elephant in the room, credit. I've stressed many times, if you've met me or you've talked to me before, you know how I stress the importance of credit. So I realized a lot of you probably would not know what this credit is, especially if you're new to Canada and you're just probably hearing the word for the first time. Credit. It's not credit like I'm giving you a credit note to borrow something. No, similar, but not exactly that. Okay, so today I'm going to break it down for you. We're going to be talking about the WWWH of credit. Who, what, when, and how of credit. Who needs credit? What is credit? How do you build credit? When do you build credit? So we'll cover all of that in this video. So before I go into detail, I want to tell you a little bit about me. I'll tell you a story about me. When I first came to Canada, I was told I needed credit to get a cell phone. And when I asked more questions, they said, oh, you need a credit card. When you get a credit card, you get credit. And when you get a credit card, you can get a cell phone. And when you have a cell phone, you can build credit and all that information. But nobody really took the time to explain to me what credit really meant. So I walked into a TD branch, opened a student account, and I was offered a $500 credit card. To me, that was free money. As a student, I needed every penny I could get. International student, I mean, come on. I needed every penny I could get. So I spent that money like it was mine. And by the time it was done, I got collections on my back trying to collect that money. And, before I knew what was going on, I ended up with horrible credit. Horrible credit. So I don't want you to make that mistake. So if you're new to Canada, credit card is not your money. But I'll go into details as to what you need to do to build credit, why you need to build credit, and all that jazz. So let's talk about what. What is credit? It's simple. People say, what is your credit score? Right? So some of us know what credit score is, but we really don't know what really makes up credit. Because credit is more than just your credit score. But the credit score itself is just a 3-digit number that represents to the lender your ability to pay a loan. Simple and short. It represents who you are to the lender, and it tells the lender if you can afford to get a loan, or if you'll be responsible enough to get a loan. That's pretty much what it is. A good credit score will be around 680. A perfect score is around 800, and depending on what credit information you're pulling. So the credit score and the credit profile, that's your credit report. So we know what credit is. Now let's talk about why the credit is important. So I already mentioned that the credit tells the lender about you. But some things that you might not know is that a credit is not only used only when you need to get access to funds. Sometimes some employers will pull your credit score because it also tells your employer and give them an insight about your personality, who you are as a person. Are you responsible enough to pay your bills? Will you be committed enough to the job and the responsibility? So yeah, employers in Canada will from time to time or can exercise the right to pull your credit. And sometimes when you apply for a job, you see a disclosure there that tells you that they'll pull your credit. So that's two. Recently, the insurance company also is pulling your credit. So when you have a car in Canada and you need to get auto insurance and you're wondering, oh, Peter and I live in the same house, I'm paying $80, or Peter is paying the $80, and my insurance premium is saying I pay $250 a month. Why? Yep, I'm sure they pulled your credit. Maybe they put your credit and they saw some derogatory messages in there, or they saw information that wasn't really palatable to the insurer. Automatically, you go from low risk to medium risk to high risk. And all this are determined just by looking at your credit profile. So now you understand the importance and why credit is very important. So now let's talk about who. Who needs credit? Perhaps if you're a guest or you're just visiting Canada, you're thinking, oh, I don't need credit. I don't want credit. But really, anybody who sees themselves doing any form of business in Canada for a short period of time or a long period of time needs credit. And anybody can build credit in Canada. It doesn't matter your status in Canada, how long you've been in Canada, you can start to build credit today. So if you're a visitor in Canada and you open a Canadian bank account, automatically they are going to pull your credit. It's called a soft check. When they pull your credit, somewhere along the line, you've already sort of established credit. But to really establish credit further, you probably would need to get a credit card. So if you're a visitor, you might not qualify directly to get a credit card, but there are some banks that might offer you a secured credit card or even a credit card depending on your history and relationship with the bank. However, if you're here as an international student, a permanent resident or citizen, or you're a returning citizen of Canada, maybe you've been out of Canada for years and you're just returning, you can start to build credit. You can walk into your local bank, set up a bank account, and ask to speak with a banking advisor, get a credit card. If you don't qualify for a credit card, you can do a secured credit card. Capital One is one of the banks or agencies that allow you to do that. It's easy. Almost everybody is guaranteed to get approved. So if you're looking to start building your credit and the bank says no, go online and check for Capital One. You can start building your credit with Capital One. You might have to pay and secure the credit card, but still is an option. And definitely, if you continue to show being responsible within 6 months, they might actually waive and give you back your original funds. So pretty much anybody can build credit in Canada. So you may be wondering, when is the right time to build credit? When do I build credit? As you can already imagine, your credit profile cannot be built in one day. It takes history to build credit. So if you're thinking about when can I build credit, today. Start as soon as possible. So if you just arrived in Canada, you want to make sure that within your first week of arriving in Canada, you book that appointment to the bank and get set up with a credit card and a bank account, okay? So the earlier you build credit, the better for you. In a subsequent video, I'm going to be talking about, all of this and why it's important. But for the sake of time and to keep this video short and sweet, I will not go into much detail. So how do you build credits? Now that's the big question everybody keep asking. How? We've talked about what credit is. We've talked about why credit is important. We've talked about when you should build credit, and we've also talked about who credit is for. But how do you build credit? Like I said, you start today. That's the when. But how do you actually build it? My recommendation, I always tell all my clients to get at least 2 credit cards, minimum. If you can get a diverse credit portfolio, like maybe a credit card and a line of credit, great. But if you can get 2 credit cards at the very minimum, that would be great as well. So you can start building your credit just by spending the card and paying it back. When you use your credit card, you have about 28 days interest-free to pay that. You want to make sure that you're using your credit card the way it's actually intended to. You use it and you pay it back within the first 28 days. That's why you have that grace period. Now, I understand that life happens and sometimes you're not able to pay the full amount within 28 days. Maybe, some money you were expecting did not come through, or your paycheck got delayed, or whatever the reason is. You want to make sure that you are not spending beyond 30% of your credit limit. What does this mean? Let me break it down for you. Let's assume you walk into the bank and you get a credit card and they start you off on a credit limit of $1,000. You need to keep your utilization below 30%, meaning do not spend more than $300. Yes. Don't go on a shopping spree and spend the entire $1,000. Now you can do that, but if you do that, you want to make sure that that's $1,000, you've paid at least $700 back into your credit card before your 28 days grace period. Very important. Let me say that again. You want to make sure that you've paid 70% back into your credit card of your entire credit limit. When you do this in 6 months with all your credit products, you will see that the banks will call you and offer you more credit lines. They'll offer you to increase your credit limits because, they're saying that you're being responsible. So they'll give you access to more credit products. For example, like last week, I got notification from my bank. They've increased a credit card that I had for the last 2 years at $20,000 limit. They increased my limit to 40. Now, it's not my money. It's just because they see that I'm responsible with the little and I'm not using my limit. I'm not maxing out my limit. So they keep giving me access to more credit. And sometimes you see also after 6 months or so, or to 1 year of using your credit, you see like, oh, you've been pre-approved for a line of credit. You never applied for a line of credit, but just pre-approve you because they see you're responsible with your credit product. Another thing that you probably don't know, and I'm giving you this now for free as a bonus to you, your phone bill can count towards your credit. Your utility bills is reported on your credit profile. And most importantly, when you start building your credit, unless you absolutely need additional credit, don't go seeking for credit. What do I mean by seeking for credit? Let's say you have 2 credit cards already and you're building your credit profile. Sometimes you walk into Walmart and Walmart will tell you, hey, apply for a credit card to get 10% off your groceries today. And you apply for it. You actually hurt your credit score by doing that. And you hurt your credit because it seems like you're seeking credit. So if you have multiple of that, over time, you will see that your credit score will start to go down gradually. And if you continue to do that, you'll end up with a horrible credit. So don't go seeking credit. The best thing to do is to find financial institution that you like and you want to work with and apply for the credit product there. Naturally, when you keep using their credit product, you get pre-approval. And when you get pre-approved and you accept it, it doesn't affect your credit and you can build your credit profile that way. Okay, so we've talked about everything you need to know about credit. If you have more questions about credit and how to build your credit in Canada, you can contact me directly. I'll put my contact information in the description and on the screen as well. You reach out to me and you book a one-on-one consultation. I will go through, where you currently are in building your credit, and I can provide more direct and individualized tips on how you can improve or build your credit profile. Thank you again for watching, and don't forget to subscribe and hit the notification bell. Bye.